Hi, welcome to the Investment Blueprint. I'm your host, Raghu Kumar from Rain Technologies. The Investment Blueprint is a weekly podcast where you can find me interviewing real-world quantitative traders and investors, hedge fund managers, and industry experts in the field of quantitative, data-driven trading and investing. My goal is simple. I want to help you make more consistent, profitable trading decisions in a data-driven and meaningful manner. Today's topic is on how to do algorithmic trading in India with a focus on technical analysis. The goal of today's episode is to provide a bit of context into technical analysis and how retail algorithmic traders can utilize technical analysis successfully. Today, I interview Vishal Mehta from MarketScanner.in. Vishal has covered a lot of different roles in the financial industry's landscape, including stints at Thomson Reuters, Bloomberg, and 63 Moons, which was previously known as Financial Technologies. His focus in all these organizations has been mainly on charting and technical analysis tools. Vishal is also the president of CMT India, and CMT, as per CMT's own website, the Chartered Market Technician designation is the preeminent designation for practitioners of technical analysis worldwide. Vishal has been instrumental in increasing awareness about technical analysis across South Asia. He has trained central banks in India, Nepal, Sri Lanka, Maldives, as well as at buy-side banks and corporations. He is mainly a systems trader and focuses on mean reversion trading systems with money management. Today, I will try to pick Vishal's brain and get to know a little bit more about technical analysis and how one can successfully implement TA tools to improve the trading in a quantifiable manner. So Vishal, welcome to the podcast.
Thanks a lot, Raghu. Thanks a lot for the opportunity.
Fantastic. So let's get right to it. Let's talk about your trading background. How did you get into trading and specifically, algorithmic trading?
Awesome. So, trading is not new to me. Like I have seen my father trading. We were the BSc brokers way back in 1992. So I've seen him going to the open outcry system, shouting. But during the journey, he told me there is something called as technical analysis that all talks about. And I didn't know anything about technical analysis. So what he does, he sends me to one technical analysis workshop. I didn't know how stock market functions, Raghu, okay, at that point of time. But I could see one thing, that if the stock was about 200-day moving average, it goes up and you make money. And if it is below 200-day moving average, the stock goes down. And I seriously found it very fascinating. I was like a boy in the candy shop. Like I could see a lot of tools and things flying around, and I said, let me explore that world. So I got a job with a company called Spider Software, which was like a leading company when it comes to technical analysis in India. So they kind of hired me to talk to traders and help them to make money using technical analysis. So my job was to interact with them, find out what they want, and build strategies for them. Then I moved to Reliable Software and then Thomson Reuters and Bloomberg. All along, one thing remained common to me was technical analysis. Okay. And that's what I believed, that I want to build my career on technical analysis, and that's what I did my CMT. But let's talk about my trading background. So I was a pretty good trader. I would say I was a pretty good discretionary analyst. So I could really look at the chart and I can understand what's going to happen to the stock and the indices, either they're going to go up or go down. But when the real money kicked in, I used to get emotional. Okay. So that's why I have a very clear distinction. I'm a good discretionary analyst, but I'm a pretty bad discretionary trader. So I kept on doing for a while, and I could not get my holy grail, I would call it, myself, what I should be comfortable with. Luckily, I read a book called by Larry Connors, and Larry Connors is like a well-renowned author in US. I've actually read one book, and I was surprised the way he has quantified the rules using an RSI, which is like a 2-period RSI. Now the world knows about it, right?
Right.
And he started showing about edges. Like never in my life I came across a word called as edge. Like we were talking about profit, loss, drawdown, but there is someone who is talking about edge, and a small edge, like 0.25% or 0.5%. And he is actually running kind of an hedge fund. And I got very interested. And then what it really dawned on me, that as a trader, we should be a casino owner. It's a lack of a better comparison. But I always believe as a systematic trader, you should think of yourself as a casino owner rather than a gambler who is going to casino. The edge needs to be in your side, and you start building the games or things like that in your favor, and you keep on doing it again and again and again and again, and that's how you make money.
It's a nice analogy, yeah.
So that's how my journey. So I kind of understood the strategies, and I actually never got a good coder. Although India is known to be a coding hub, right? Like you will find a lot of coders in India. But I actually reached out to Matt Radke, who is in US, and I asked him to develop some mean reversion short only strategies. To my surprise, it worked like a charm in Indian market. I took the strategy, started trading it, and it really worked for me. So that's what I realized, that for me, a systematic trading approach was much more better than a discretionary trading. And that's where I built my last end of this journey. For last 3-4 years I've been focusing only on the systematic trading.
That's very interesting. So that's going to take me to like a different question, which was not planned. But do you think a trader should only adopt the right type of trading style based on their personality? So maybe in your case you were more kind of aligned with systems generally, so you were kind of drawn by this, but do you think that's something that the average trader should also kind of think about?
So I think I'm a firm believer, and it's an excellent question, Raghu, that you have asked. Like, let's put it this way, okay? If you are an excellent carpenter, okay, and the tools that you are going to use are not for your carpentering work, they are like something that a farmer, would use, a saw or something of that sort, it will not fit. It's not the right fit. What I found out, there are exceptional discretionary traders as well, exceptionally good, because that's their style. They really want to predict the market. When they go right, they bet it big. On the other hand, like people like me who really get emotional when the trading starts, putting money, I would rather put some rules, and I know historically they have worked for me. So I would let the law of large numbers play out in my favor. I really don't want to punt on the next trade. I don't want to punt on the next 3, 4, 5 my calls. I would rather look for 1,000 or 2,000 or 5,000 trades to play that edge, that small edge to come in my favor. So it's all about your style. And the earlier you figure out what's your style, are you a discretionary or a system trader, better for you.
100%, yeah. That makes sense. And I was going to say, as we know, 90% of traders lose money, right? So maybe if you notice that something is not working so well, then maybe you should change.
Yeah.
But I want to kind of, talk about kind of your experience at Reuters and Bloomberg, because, those are, and also FT, right? I mean, those are 3 kind of like esteemed organizations, right? So how do you think, your experience at each of these kind of organizations has kind of shaped who you are today?
Awesome. So basically, when I worked with Spider Software and Reliable Software, at that point of time, I was more retail focused. And I always used to think that a buy side or a hedge fund would be doing something really out of the box. Okay. There are many hedge funds who does it, but at least in India, we are still plain vanilla funda techno approach kind of a guys. Even from the buy side angle, I've handled the biggest of the biggest buy side, like a HDFC mutual fund, to one of the largest, investor in India, or multi-billion dollar investor in India. I manage his account as well. And to my surprise, everybody had a chart on their Bloomberg or a Reuters terminal, and invariably there will be a 50 and a 200-day moving average, even though they were a hardcore fundamentalists. Okay, they would never swear by technicals. They will say, technical analysis is useless, it's crap. And then when I go to their screen, I see why there is a chart with a 50 and a 200-day moving average, and most of the time they would give me an argument that it's there. I just want to understand, okay?
Yeah, it's like, yeah, exactly. But then why would you take that effort to keep that open on your screen, right?
Yeah.
Unless it's important, right? Yeah.
So for them also, somewhere, those 50 and 200-day moving average, and as we speak right now, like, when you have seen in times and again, when the prices comes to a 200-day moving average, it starts to act as a support. Somehow, miraculously, but what we call them in a technical analysis is more of a self-fulfilling prophecy, because everybody believes that it works and everybody puts in their buy orders, and that gets in, the demand increases and the prices shoots up. And you go back to a technical analysis 101 and you tell everyone, see, the 200-day moving average worked like a charm. So that's what I figured out, that even the buy side, although they are not upfront in accepting that they use charts, but somewhere when they talk about price action, they talk about this is the area that I'm going to buy. Somewhere they are looking at the chart where the demand and supply playing out.
100%, yeah. And that's the interesting thing about technical analysis. I mean, there's so many ways of incorporating it, right? You don't have to, you can either be a hardcore, TA guy who only makes every decision based off of charts, or you can use it as a way to supplement and accessorize your trading, right? As long as that's what you're looking to do, and you're not just kind of, throwing a dart on a dartboard,
Interesting. So Raghu, I have a question for you. You are a hedge fund guy, right?
Yeah.
And you've been doing this. How much is technical analysis as part of your trading?
So honestly, at Rain, I wear a different hat now. Back in the day, I did manage, a fund, but that was a prop fund. So when you're dealing with your own money, I think you have a different type of approach to dealing with risk and things like that, right? But when you're dealing with, client funds and things like that, it's a different ball game. So in our case, we have, CIOs who kind of decide, make all those decisions.
Sure.
So I would have to ask, Lakshmi, to be honest.
Awesome.
But I do know that we do reference things, right? Because there's two ways of looking at TA. I think one is, and which is kind of what you talked about, right? One is you look at the chart and say, because these things are happening on the chart, therefore things are going to play out. But there's also this kind of expectation from the market, right? Because people are looking at these charts. So that can actually be an indirect cause, right? Because I'm expecting it, therefore it plays out, So when you have like 52-week highs and lows and things like that, right? It's like, yes, there is a 52-week high happening. So theoretically, it's like, oh, okay, a company is doing really well, therefore it's going to do well. But it's also like, there's so many people looking at that thing, right?
Yeah.
So it's like this weird halo effect. So I think it really, like you said, you have to, ultimately, this is what we do every day, right? So you have to be comfortable with that style of trading.
Sure.
And so whatever it is that you're doing, I think it has to be a part of who you are. If you're someone who's just a coder, then you code away, right? And you look at code and you only do things at the code level. But if you're also someone who, enjoys spending some time every day looking at charts, then you can incorporate that, So I think that's where people also kind of get it wrong. They kind of stay so focused on one style of trading,
Interesting.
But so I'll ask the questions now, right? So I'm going to ask you about marketscanner.in, right? Because I think it's a really cool website. So how did you come up with the idea, and what's the purpose behind it?
Excellent question, Raghu. Thanks for asking this. So as a trader and as a CMT, chapter chair and everything, and being in the market for a long time, I used to ask, Vishal, we are a newbie in the market. Okay. Where should we go? What should we do? Which software should we purchase? Which trainers are the genuine ones? Okay. Which strategies does really work in the market? And I said, hold on for a second. I had the same questions when I started out my journey. I never had a common place where I can go and take an unbiased view of someone whom I can trust and tell me, like, I've gone through this journey, and this is what I think really works. These are the things that I don't recommend it, or it's not there on the website. So maybe it's not, I have experienced it, but these are the things that I've experienced it and really works. So that's where the origination of Market Scanner actually happened, where we talked about some of the software like MarketSmith India. Okay, it's a phenomenally awesome tool for doing a swing trading, and I use it for my personal swing tradings as well. And I said, hold on for a second, if I'm benefited, let me just share what I'm benefited from. and I did a course by a guy called Madan Kumar, and it completely changed my psychology. And I know in India there is so much of I would say, like, a lot of not so nice trainers who do not trade themselves but train a lot. I said, okay, here is this guy who really trades well and trains well. Why should people not benefit from it? From there, Market Scanner also take another approach where we started having an in-house quant team, where we were trying to run through the data and trying to find out seasonalities. We were trying to find out time of the day when we want to execute the trades. We were trying to find out the day of the weeks, and those are those kind of unique approaches. What are the bank nifty ranges on a particular day? And then started building strategies on top of it. So now, as in, if I really want to put the broad scope for Market Scanner, it will be 3 E's: education, execution, and evaluation. So we have already done our education piece a lot. I have done a lot of trainings which are quantified in natures. These are the strategies where I'm managing my own money. So not something like, showing something and doing something. It's my own money that is also on the line on the same strategies. That's on education piece. We have recently launched an automation tool for retail traders where execution happens. So that's the execution. And eventually we are going to come out with a tool where people can evaluate themselves, be it on psychology, be it on the discipline factors that they are not following. So this is the 3 E's that I really wanted to implement in Market Scanner. So Market Scanner is all about 3 E's: education, execution, and evaluation.
I love that. It's really easy to think about it, and it's like interesting because I think each of those words has like 9 or 10 characters. So you visually, it's like it looks really nice. I can already see it playing out. That's really cool. So you've kind of been around the Indian markets for a while, right? Not to make each of us sound old here, but you have kind of seen the whole evolution of the financial markets playing out. You talked about your dad and all that, and you've been around the markets for a while, right? So how do you think kind of algorithmic trading has evolved? Specifically with systematic algorithmic automated trading, how has it evolved? Over the past, like, say, 10 years.
So I think so. The real what we if you're a technician, you would have heard of a term called as third wave in Elliott wave. Okay, if not, then I just want to make it very simple. It's the strongest rally in the market that we can ever see. Okay, that's the third of third. What we call it is in Elliott wave, but in a very general parlance, when we had an open outcry system, when the when the screen-based trading came into India, people literally hated it. So people were so comfortable with an open outcry system where people were making money. When the transparency came in the system, people didn't like it. And from there, this transparency took a long journey. If I remember, it was like from 2002 to now 2020 now. Okay, we have been trying to go through various cycles, and I think so. Algorithmic trading was allowed about 6-7 years ago, but it was not meant for retail traders. It is still
Right.
pretty much the big boys game. And all respect to our regulators who really trying to safeguard the investors. But eventually, what I've seen is the retail participants are also benefiting from the rule-based or algorithmic trading. Okay, what I've seen in my personal capacity, where I'm every day on my LinkedIn, Twitter, on my Facebook, whatever the social media, Telegram, I keep on getting messages after messages. Sir, we want to get into automated trading, or we want to get into an algorithmic trading, and that's just exploding right now.
Yeah.
That's just exploding. I think we are at the right cusp where, if really put out in a right structure, a lot of traders would benefit. So it started out with a direct market access for the institutional. Then it came like a one touch with the retail participants. Now this whole world of the APIs that is opening up for a lot of guys like us. So that's where I see a tremendous amount of opportunity coming in. And yeah, but the most important benefit that I'm seeing, Raghu, is I'm not talking about people going to make shit lot of money. Okay. But the only good side that I can see is people are not losing shitload of money.
100%.
Right? Because
100%, yeah.
systematic trading stops them. The rules are in place. All those, I still keep on getting a lot of messages that today is an RBI governor who's going to make an announcement, and we should not be trading it. And my question to them is, did we remove all those days in our back test when the RBI governor came in?
Right.
And the answer is no.
Right.
To that point, then why you want to exclude now? Because we have been so habituated thinking that we will outsmart the market. And trust me, that day was the best day. Okay, because we traded, that was the best day for us. About 1 week back only, in 6 months. Imagine if I would not have traded that day, or people would not have been disciplined enough to trade that day. That was supposed to be the best day.
Right.
Yeah. So
it's a really nice way of putting it, because I think there's a couple things at play there, right? One is, we sometimes, I think traders, especially discretionary traders, they have that itch of wanting that uncertainty, or this itch of trying to outsmart the markets, right? And so if you have that itch, then go for it, right? Then go and do what you need to do, right? But if you believe in this idea that, like, hey, I can just systemize the whole thing. I mean, returns is one part of it, right? But it's not just returns, man. It's also just being chill, right? Like going through the day from morning to night without having to have all those emotions come up, right? Or being able to save on time, right? All the time you're not spending in front of a screen. Or just, even from like mental health, it's a big buzzword, right? Everyone's talking about mental health, and everyone's talking about, lowering anxiety and things like that, especially in today's day and age. There's already enough anxiety, right? Why do you want that extra anxiety coming from the stock markets? Why not just, systemize all your trades and have everything run in an automated manner? But what I've realized is, there's many things that play there, right? You need the right infrastructure, like you said, the right APIs and all that stuff. And then it has to be something you want to do, like you need to want to automate, otherwise, if you have the itch, then it's like a never ending thing, So
let me repeat a brilliant quote by Ed Psychota from Market Wizard. Okay. Mm-hmm. Everybody gets what they want from the market. If you want excitement, 100% you'll get excitement. You really want a peace of mind and really do your stuff and make money, you can do it that as well. So it's up to you. What do you want from the market? You want excitement? Definitely go for it, and you will get more excitement. But one more thing that I really wanted to put out, Raghu, that a lot of people, including when I started out, I thought that if I would have automated my strategy, life will be chill. Let's be very practical and honest here. Okay, it's not that way. So you are in a cockpit like 80% of the time or 90% of the time on a long distance flight. Most of the time it is on autopilot. But while landing and taking off and on the turbulent weather, pilot takes over.
Just turbulence,
yeah. The same thing happens in our auto trading. Take off. Once the market starts, everything looks stable, you are on autopilot. Then you don't have to apply your brain, because these are the things that has been going through. If turbulence happens, exchange goes down, your broker goes down, obviously you need to sit in front of the screen, but in a much more passive manner than the active manner. And that's really wanted to kind of because people think that I put my algo, go for holidays and come back.
Go to the beach. Go to the beach. Turn off internet. Turn off Wi-Fi. Yeah, life's not like that. Unfortunately, you can go to the beach, but you're going to make sure that your phone is on.
And you can keep on checking your systems. But it is much better than the previous life that I had it. Like 100%. I keep on telling quite a few of my friends that the best time to call me is during the market hours, because I have nothing to do.
Exactly.
Because if I'm looking at the market, I will have an itch, as you are rightly saying, to outbid the market. I don't want to do that. Keep on calling me during the market, and I'm always available.
Right, 100%, yeah. So I want to kind of, go back to technical analysis a little bit, right? So, obviously there's many different ways of looking at technical analysis, but just generally, right? If there is a listener out there who wants to actually incorporate, practical indicators and things like that, what are the sorts of indicators that they should be looking at, and for different types of market conditions as well?
Uh, Excellent question, Raghu. So I think so. The first and the foremost thing that you have to build your strategies on the core principles, or what we call as the first principles of trading. Okay, and then decide your systems or the indicators about them. If you ask me what are the first principles, like market will always trend. Okay, there will be days where the market will be sideways, but most 30% of the time market will trend. So obviously you want to have an arsenal of an trend following indicators. What could be the trend following indicator? If you ask me personally, I just buy the stocks which are making an all-time high price. I know a lot of people are English, but in India there is a community which dominates this trading community, which is Gujaratis. Okay, and we call him as a Bhav Bhagwan Che. That means, translated, its price is the god, not even king, it's the god. Okay,
Right.
so it's Bhav Bhagwan Che is equivalent to price is the god. So if a stock is making an all-time high, it's a purest form of trend following.
Right.
Okay, so you want to build your price as your one of the most important indicator, I would call it. Okay, so that's one way of looking at it. Second, market will mean revert. Okay, so for the mean reversion, the best indicator that I've always come across is my favorite author and mentor, Larry Connor's 200-day moving average and a 2-period RSI. Seems to do phenomenal job when it comes to developing mean reversion trading systems, or maybe a percentage change. So I don't actually apply a lot of indicators. I started my journey with everything. I would have started with normal moving averages to oscillators to MACDs to everything in the world. Then when I did not make money, it's not because of indicators, it is because of me. I thought there was something more. Then I went to more complicated ones like Ichimoku. Then I went to the crazy point and figures or Renko Kagi, something mysterious.
Yeah.
And even when I did not make money, I went to even more exotic ones like Gap, Elliott Wave, and still did not make money. So then I realized, when I became like a systematic trader and the consistency came in, it was never about indicators. It was about the first principles and building the indicators along with maximum one or two indicators and simpler ones, because then you can trade it. Otherwise, a lot of people can put a lot of indicators, makes you fully convinced that he is a brilliant chartist, but can't make money out of it. Okay.
Right.
So second, for a mean reversion, a moving average and a 2-period RSI is brilliant. Okay, and the market is volatile. Okay, these are only 3 phases can happen, right? And for volatility, I don't use it, to be honest, but you can use Bollinger Bands or anything of that volatile indicators. So again, repeating, for trend following, price; for mean reversion, a 2-period RSI or an RSI for that matter; and for volatility, a Bollinger Band indicator. That's as simple as that.
100%. Yeah. No, I love that. I mean, it's a very simple way of looking at it, right? Price is king, right? Price is
Price is
blood,
king.
whatever you want to call it, I think in the US, price is king is a pretty common term, But so, how do you think algorithmic trading is going to evolve, in the next maybe 5 years, 10 years?
In Indian context, I think so. We are again the birthplace for coders, right? And if you see our discount brokerage, and you have been one of them, you have seen the growth, how people who are techno savvy are trying to get into the market. So what I've seen is we are, I think, about 65 to 70% already trading around through algorithmic, but most of the time it is high frequency trading, arbitrage funds, delta neutral strategies that are running, or a put call parity arbitrage running on the co-location services. That's almost saturated market right now.
Right.
Okay, the biggest scope that I can see is the Robinhood traders, or the
Yeah.
coders, I would call it. And that's where I see a tremendous amount of what we call as a hockey stick curve, right? You have like this big up spike
Like a
coming
J
in.
curve.
Yeah, like a J curve.
Yeah.
And it's growing every day by leaps and bounds. People will get more smarter. I remember talking to Larry once, and they said, okay, the mean reversion strategies are now finding it difficult because everybody's jumping into mean reversions, most of the traders, right? So yeah, eventually we have not reached there, but yes, there is going to be, and there is going to be a J curve right now. We are at the beginning of the J curve. The retail participation in algorithmic trading is going to just blast it out.
Yeah, 100%.
So that's where I see a lot of smart people coming in the industry, like from the IITs and IIMs, trying to use their hands on how they can make money in the market.
Makes sense, man. Yeah, I think that's I totally attest to everything you said. So, the last question of the day, Vishal, is, what are your kind of personal and professional goals when it comes to, market scanner, and just kind of maybe more from a bird's eye perspective, just kind of being involved with this whole space?
Sure. So, from the market scanner perspective, I always believed, Raghu, I remember there is a famous quote by Warren Buffett where he says the markets are nothing but, transfer of wealth from an impatient to a patient investor. We are a Gen Z generation. We don't believe in like long-term growth. I'll be very honest. Okay. I always look for, like it or not, but we are Gen Z and instant gratification, but that comes at a cost. And what I've realized to compensate with that loss is bringing in discipline. So I've just modified the quote by Sir Warren Buffett, I would call it. Markets are nothing but a systematic transfer of money from an indisciplined trader to a disciplined trader. Nothing more than that. And I use my words very carefully. Systematic transfer. The people who are more systematic in their approach and more disciplined in their approach, the wealth is going to transfer to them. So the idea with market scanner is to make people more and more and more disciplined. Even I had to, kind of hammer it down. I will go to the last extent to make sure that people become more disciplined, because it has helped me. So as I told you, the full idea of a market scanner was what has helped me. Should I, send it out to everyone? So that's from a market scanner perspective. From my personal growth perspective, obviously I'm building my AUM. I'm growing month on month with I just ran a competition with one of your competitor broker Fires, and there were 8 consecutive months out of 7 months I've been consistently winner. So
That's amazing, yeah.
every month you keep on winning. Just one a losing month. So what I'm trying to build is a lot of consistency, build a lot of various models, and grow my AUM and growth from the personal wealth as well.
100%, of course, and that's very important, right? I mean, there has to be multiple reasons for why we do these things, but you mentioned, competitors. I think Fires is a great brokerage. I mean, it's a pretty closed world, so we all know each other, and I know Tejas as well.
Yeah.
So, and hopefully, he's going to be on this podcast as well.
Oh, so, nice.
That's a plan. But thank you, Vishal. That was an amazing interview, and I'm sure our listeners are going to appreciate it. Thank you.